Welcome, future CPAs. In this explainer, we are going to build your professional toolkit for financial analysis. And this is all designed for long-term retention to help you absolutely crush it on the LCPA.
So picture this. A company announces that its sales are up by $4 million this year. I mean, your first reaction is probably, whoa, that's amazing. Sounds pretty great, right?
Well, hang on a second. On its own, a number like that, it means almost nothing. I mean, what if last year's sales were $1 billion? That $4 million is just a drop in the bucket. The whole point is we need context to turn simple data into real insight.
Okay, so here's the game plan. We're going to stock your financial analyst toolkit with 3 super powerful techniques. Then we'll show you how to use them all together, and finally, we'll wrap it all up in a cheat sheet made specifically to help your brain lock this stuff in for your studies and, your whole career.
Right, so as we just saw, raw financial data is pretty useless until you compare it to something. Is it better than last year? How does it look next to a competitor? What about the industry average? That's where the real analysis kicks in.
Our very first tool is basically a time machine for a company's finances. We call it horizontal analysis. It lets you literally look back in time to see exactly how things have changed from one period to the next.
And how we do it is by calculating both the dollar change and, this is the important part, the percentage change for each item. This is what's so cool about it. It doesn't just show you what changed, but it shows you the direction and the real impact of that change.
Okay, now this is where the story really gets juicy. Let's look at this chart. Sales are up 8.3%. Not bad. But, look deeper. The cost of goods sold, what it took to make those sales, shot up by over 14%. And the result? Our net income actually tanked by almost 22%. This is the kind of mind-blowing insight the time machine reveals. It's a massive red flag.
So what's the takeaway here? This tool helps you answer that huge question, where is this company actually heading? It takes a boring static report and turns it into a dynamic story, showing you exactly what you need to investigate next.
All right, let's grab our next tool. Think of this one as your magnifying glass. We call it vertical analysis, and it lets you zoom right in on a single period to see the internal guts of a company. It's so simple, but it's incredibly powerful. For an income statement, every single line is shown as a percentage of total sales. For a balance sheet, it all becomes a percentage of total assets. This creates what we call a common size statement, which is awesome because it lets you compare a huge company to a tiny one, apples to apples.
And here's why the magnifying glass is just so useful. For every single dollar in sales this company made, 50 cents immediately went to the cost of the product. Another 30 cents went to operating costs, like rent and salaries. 10 cents for taxes, and what's left? Only 10 cents was actual pure profit. It gives you this crystal clear snapshot of a company's cost structure.
Vertical analysis makes comparing key margins ridiculously easy. Look here, we see a massive 40-point gap between the gross margin and the net profit margin. As a future analyst, that tells you instantly where the problem is. Those operating expenses are eating up the profits. Okay, our final tool is the GPS. We call it trend percentage analysis. This is the tool that charts a company's long-term direction, comparing every single year's performance back to one single starting point, the base year.
By setting that base year to 100%, we basically standardize all the data. It makes seeing long-term trends and big shifts over time so much easier because you're not getting lost in a sea of random giant numbers.
Let's check out this real-world example from McDonald's. We've set 2006 as our 100% starting line. Now just watch the story play out. By 2012, sales had grown by 32%. Pretty solid, but what's really amazing is that net income grew by a whopping 54%. That tells you it was a time of serious increasing profitability. That's the kind of thing investors go crazy for.
So this tool, the GPS, it helps you answer that big picture question, how has the company evolved from where it started? It gives you that crucial historical context, showing you whether a good or bad year is just a fluke or part of a much bigger pattern.
Now, this is where you really level up. A true financial detective never, ever uses just one tool. The real magic happens when you combine the time machine, the magnifying glass, and the GPS to build a complete 360-degree story about a company's health. Okay, check out the method. You start with the time machine to see what changed. Then, you whip out the magnifying glass to understand why it changed.
And finally, you fire up the GPS to see if this is a new issue or an old bad habit. This is how you go from just seeing numbers to actually understanding the story behind them, which, by the way, is exactly what the LECPA is testing you on.
All right, let's make sure this knowledge gets locked into your brain for your exams and, well, forever. Your brain remembers things best when it's active, so here are some science-backed tips to make sure you never forget your new toolkit.
And I'm serious, you have to actually do these 3 things. Linking to the analogies, that creates a mental shortcut your brain loves. Calculating by hand, that builds actual muscle memory. And teaching it to someone else, that forces your brain to organize the info clearly. This is how you hack your brain to move this stuff from short-term memory into long-term memory for good.
So here it is, the whole explainer on one slide. This is your cheat sheet. The time machine looks across time. The magnifying glass looks inside one moment in time, and the GPS looks back to see where the whole journey started. Simple as that.
Your toolkit is officially good to go. The next step? Go use it. Remember, you're not just training to be an accountant. You're training to be a financial storyteller. Good luck.